Welcome back. Today, I'm breaking down 9 stocks you've been asking about, everything from crypto miners to biotech and gold. I've dug into the fundamentals, recent performance, and future prospects for each. We'll cover BMNR, ALB, RVTY, QS, IBRX, HTZ, IREN, NGD, and CLVT. Are they buys, sells, or avoids? My goal, give you a clear, no-nonsense take so you can make smarter decisions. Remember, this is just my analysis, not financial advice. If you find this helpful, hit that like button and subscribe for more deep dives. Let's jump into the first stock. First up, let's talk about Bitmine Immersion Technologies, ticker symbol BMNR. This is a company that's been catching the eye of crypto enthusiasts and tech investors alike, especially as the world of digital assets continues to evolve at a rapid pace. Bitmine doesn't actually mine crypto themselves. Instead, they specialize in making immersion cooling technology. Think of it as high-tech baths for mining computers, keeping them cool so they can run at maximum efficiency. Immersion cooling allows miners to push their hardware harder and for longer periods, which can mean more profits when Bitcoin prices are high. But here's the catch. BMNR's business is closely tied to the wild price swings of Bitcoin and other cryptocurrencies. The stock itself is extremely volatile. When Bitcoin surges, BMNR often rides that wave and jumps up too. But when crypto prices fall, the stock can crash just as quickly, making it a roller coaster for investors. Right now, Bitmine is still a relatively small player. They're burning through cash as they try to scale up operations, and they're facing tough competition from bigger, more established companies in the cooling technology space. The biggest risk, if Bitcoin or the broader crypto market tanks, demand for Bitmine's tech could dry up almost overnight. That's a huge vulnerability for their business model. For Bitmine to become a more attractive investment, they'll need to prove they can secure recurring revenue streams, like long-term service contracts or partnerships, rather than just riding the ups and downs of crypto hype cycles. If you're ultra bullish on crypto and looking for a speculative play with high risk and potentially high reward, BMNR could be an interesting option. Just be prepared for some wild swings along the way. For most investors though, it might be wise to wait until Bitmine shows a clearer track record of stable growth and can weather the inevitable crypto downturns. The technology is fascinating and could be a game changer for the industry, but there are still too many ifs and unanswered questions for me to call it a buy right now. Still, if you're interested in the infrastructure side of crypto, it's worth keeping BMNR on your watch list and monitoring how they execute over the next few quarters. For now though, I'm personally passing on BMNR until I see more consistent results and a stronger business foundation. Let's move on and take a look at the next stock on our list. Transition. Albemarle, ticker symbol ALB, is a global leader in lithium, the essential ingredient powering the batteries inside electric vehicles, smartphones, and renewable energy storage systems. With decades of experience, Albemarle has built a reputation for innovation and reliability in the fast-evolving battery materials sector. As electric vehicle adoption accelerates worldwide, lithium demand is projected to skyrocket over the next decade. Albemarle is strategically positioned to benefit from this surge, supplying major automakers and battery manufacturers with the high-quality lithium they need to meet ambitious production targets. The company is not only profitable, but also boasts a long history and a truly global footprint with operations spanning several continents. However, investors should note that lithium prices can be highly volatile, influenced by supply-demand imbalances and shifting market sentiment. When lithium prices spike, Albemarle's profits can soar, rewarding shareholders handsomely. But when prices fall, the company's margins can get squeezed, leading to more challenging quarters. Albemarle's long-term supply contracts with major automakers and battery producers provide some stability and predictable revenue, helping to smooth out the wild swings of the commodity cycle. Still, the broader ups and downs of the lithium market remain a key factor. The main risks for Albemarle include potential lithium oversupply, disruptive new mining technologies that could change the cost structure, and geopolitical issues in the regions where they operate, which can impact production and exports. Recently, the stock has been beaten down alongside falling lithium prices, making it look undervalued to some. For patient investors, this could represent a compelling buying opportunity, especially if you believe in the long-term growth of electric vehicles. If you're confident in the EV megatrend and the global shift toward clean energy, Albemarle stands out as a solid long-term play in the battery materials space, with the potential for significant upside as demand accelerates. Don't expect overnight gains. This is a cyclical industry, and patience is key. But the long-term story for Albemarle and lithium remains strong, driven by global electrification and energy storage needs. For me, ALB is a buy on pullbacks and a smart addition to a diversified portfolio focused on future growth. Let's keep rolling. Transition. Revvity, RVTY, flies under the radar for most investors, rarely making headlines or trending on social media. Yet, it's a crucial player in the life sciences and diagnostic space, quietly powering breakthroughs behind the scenes. Revvity provides essential lab instruments and consumables. Think high-tech equipment and the supplies that keep experiments running. Their business model is robust. Once a laboratory invests in their systems, it's locked into buying consumables and replacement parts for years, creating a reliable, recurring revenue stream that's hard to disrupt. While the pandemic-driven demand has faded, Revvity's core growth now comes from booming fields like drug discovery and genomics, where innovation never stops. The company is consistently profitable, with a healthy balance sheet and prudent financial management. It's also well-positioned to benefit from biotech's long-term growth as the industry expands into new frontiers. Trends like personalized medicine and multi-omics research are accelerating, and Revvity's products are at the heart of these scientific revolutions. The stock has recently pulled back, making its valuation more attractive for new investors. It may not be the flashiest name, but it offers steady, compounding growth potential, ideal for those seeking stability in a volatile sector. For investors wanting exposure to biotech innovation without the risk of betting on a single drug, RVTY stands out as a smart, defensive pick. I'd call it a buy for patient, long-term portfolios looking to benefit from the future of science. Next up, a battery tech moonshot you won't want to miss. Transition. QuantumScape, QS, is chasing the holy grail solid-state batteries for EVs. If they succeed, it could revolutionize the auto industry. Faster charging, safer, more range. Backed by Volkswagen, they have credibility, but the tech is still in R&D, not commercialized. This is a pre-revenue, high-burn company. No profits for years, if ever. The risk is massive. If they crack the code, the upside is huge. If not, the stock could go to zero. QS trades like a lottery ticket, wild swings on every bit of news. For most investors, the risk is just too high. If you want a tiny speculative bet on breakthrough battery tech, go in with eyes wide open. Otherwise, steer clear. It's an exciting story, but a terrifying investment. Let's move on. Transition. Immunity Bio, Ibarx, is a late-stage biotech focused on cancer immunotherapy. Their lead drug for bladder cancer just got FDA approval after a rocky road, sending the stock soaring. Now, the risk shifts from regulatory to commercial. Can they successfully launch and sell the drug? The company's still burning cash, but this approval is a huge de-risking event. If the launch goes well, there's more upside, and it could validate their whole pipeline. Still, it's a high-risk, high-reward play. Expect volatility as sales numbers come in. For aggressive investors who believe in the science and management, it's a speculative buy. For conservative investors, it's still too risky. Watch the commercial rollout closely. Next, a classic turnaround story. Transition. Hertz, HTZ, went bankrupt during the pandemic, then re-emerged with less debt and new management. They tried to electrify their fleet with big EV orders, but execution stumbled. Higher costs and faster depreciation forced them to scale back. The rental car business is brutally competitive and low margin with lots of external risks. Hertz is in better shape than before, but growth is tough and the industry is unforgiving. The stock's under pressure as optimism fades and challenges mount. For me, it's a hold at best, maybe an avoid for new investors. There are better businesses with clearer growth paths. I'd watch from the sidelines. Let's look at another crypto play. Transition. IREN NGD is a Bitcoin miner focused on renewable energy, hydropower and other green sources. They're pitch sustainable mining to attract ESG investors and lower costs. Like all miners, their fortunes rise and fall with Bitcoin's price. Expect extreme volatility. They're expanding aggressively, but that means high capital needs and potential dilution. Holding Bitcoin on their balance sheet adds another layer of risk. If you want leveraged exposure to Bitcoin via stocks, IREN is an option, especially if you like the green angle. But the risks are huge. Crypto volatility, operational hiccups, and regulatory threats. For most, just buying Bitcoin directly is simpler. I'd pass for most portfolios, but crypto speculators might take a look. Next, let's dig for real gold. Transition. New Gold, NGD, is a mid-tier gold miner with assets in Canada. The stock is a leveraged play on gold prices. When gold rises, profits can jump. But operational performance matters. Watch their production, costs, and mine life. NGD has struggled with high costs and inconsistent results, but recent improvements are promising. The stock is cheap, but for a reason. Execution risk is high. If you're bullish on gold and believe in their turnaround, it's a speculative buy. Otherwise, a gold miners ETF offers broader exposure with less single-company risk. For most, NGD is a hold or a high-risk bet. Let's wrap up with a data business. Transition, 11. Clarivate CLVT owns subscription-based data and analytics businesses for research, law, and corporations. Their model is sticky and high margin, but they've grown through debt-fueled acquisitions. Integration has been tough, organic growth is slow, and debt is a big concern. The stock's been hammered as the market questions their turnaround plan. Management is now focused on simplifying operations and paying down debt. If they succeed, the underlying assets are worth much more than today's price. It's a classic turnaround play, high risk, high reward. For value investors who believe in management, it's a speculative buy. Otherwise, it's best to wait and see. Let's close with some final thoughts. Transition. That's a rapid-fire look at 9 very different stocks, each with its own risks and rewards. We covered speculative tech, cyclical commodities, healthcare, and turnaround stories. Remember, this is just my analysis. Do your own research before investing. Your risk tolerance and goals matter most. Which stocks are you watching? Drop your thoughts in the comments. If you enjoyed this, hit like and subscribe for more deep dives. Thanks for watching. See you next time.